The XRP community has been buzzing with excitement all week about the first US spot ETF tied directly to XRP. Many believe the big moment would come today, with the ETF debuting on September 12th. But now, after some clarification from reliable sources, we can confirm the official launch date has been pushed back just slightly. The first XRP spot ETF will begin trading on September 18th, 2025. At first, the news caused some confusion across social media. Posts circulated claiming that the ETF would begin trading immediately, while others suggested there were regulatory delays. But now we have confirmation from Bloomberg's ETF analyst James Seyffart, one of the most credible voices in the industry, who stated that the debut has been rescheduled for next week. And most importantly, he confirmed the nature of the ETF. It will be primarily spot-based, giving investors direct exposure to XRP's price, but with some flexibility to use derivatives if necessary. This makes the product a hybrid, but overwhelmingly focused on the spot market. So what does this mean for XRP and the broader crypto market? First, let's talk about timing. The launch of the ETF now lines up with the Federal Reserve's September meeting scheduled for the 17th. Markets are already expecting a potential rate cut, maybe 25 basis points, maybe more. If the Fed does move ahead with easing, liquidity will flood back into financial markets. Combine that with the launch of the XRP ETF just one day later, and we have a powerful 1-2 punch of catalysts that could send XRP and the entire crypto market into a new bullish phase. Next, let's address the speculation about whether this ETF is truly spot. According to the filings, Osprey has structured the ETF to hold spot XRP positions, which is what institutions and retail investors alike have been waiting for. The product also allows some flexibility for derivatives exposure, which has led to the hybrid label. But make no mistake, the core of this ETF is spot-based exposure to XRP. That means institutional investors will finally have a regulated, compliant, and transparent way to gain direct exposure to XRP without needing to buy and custody the asset themselves. This is an enormous step forward for XRP's legitimacy. For years, critics have argued that without institutional-grade investment products, XRP would never reach its full potential. Futures ETFs have existed, but they do not provide the same capital inflows or confidence. Spot ETFs are the real prize because they open the floodgates for pension funds, hedge funds, and wealth managers to allocate to XRP in ways that were previously impossible. Meanwhile, we've also seen other ETFs come into focus. The DTCC recently listed a Fidelity Solana ETF, as well as Canary's Hedera and XRP ETFs. This shows that the US market infrastructure is preparing for a broader wave of digital asset ETFs. But XRP remains the headline story because of its unique positioning in payments, tokenization, and institutional adoption. Now, let's consider the market impact. XRP is holding steady at around $3.05. Technical analysts have highlighted $3.05 as a key resistance level. A breakout above this level could quickly send XRP to $3.60. With altcoin season heating up, the alt season index is already at 78 points. There is growing momentum for capital rotation out of Bitcoin and into major altcoins like XRP, Ethereum, Solana, and XLM. This rotation, combined with the ETF launch, creates the perfect conditions for XRP to break through resistance and potentially start a larger rally. But beyond short-term price targets, the bigger picture is about legitimacy and adoption. The launch of a US spot ETF for XRP signals that the asset is no longer on the fringes of the financial system. It is being integrated into the very heart of Wall Street through regulated investment vehicles. This kind of development does not just bring price volatility, it reshapes the perception of XRP among policymakers, banks, and institutional investors worldwide. Of course, there will be skeptics. Some argue that a hybrid ETF dilutes the purity of spot exposure. Others say that delays signal uncertainty. But in reality, the opposite is true. A one-week delay is insignificant compared to the magnitude of what's coming. and the hybrid model is simply a safeguard to give the ETF flexibility. The overwhelming reality is that for the first time ever, investors will have a regulated spot ETF for XRP in the United States. Think about the scale of what that means. Institutional investors who were previously unable to touch XRP due to custody or compliance concerns can now allocate through an ETF. Pension funds managing billions can now include XRP in their portfolios. Hedge funds looking for exposure can do so without worrying about wallets, private keys, or counterparty risks. The capital inflows this unlocks could be staggering. And all of this is happening just as the broader macro environment shifts in XRP's favor. With rate cuts expected, regulation advancing, and altcoin season heating up, XRP could be entering one of the most significant periods in its history. So, to sum it all up, the REX Ospray XRP Spot ETF will not debut today, but it will launch on September 18th. It will be primarily a spot ETF with some flexibility for derivatives. It aligns perfectly with the Federal Reserve's upcoming rate decision, creating a week that could change the trajectory of the crypto market. This is a delay worth celebrating because it sets the stage for XRP to finally receive the recognition and adoption it has been waiting for.